and it's AIG. It's actually one of the more important corporate news stories of the morning.
How much more money can Blackstone make, David? How many yachts? How many yachts do they need?
Blackstone has had a great run of success as they have continued to transform themselves from what we still sometimes describe as a private equity firm into really what is a broad-based alternative assets manager with a great deal of permanent capital. And this deal with AIG, let's go through some of the particulars with you, and then let me just try and give you a sort of a sense as to what's really going on. But AIG, remember, is going to spin their life casualty business. 9.9% stake in that retirement casualty business is going to be taken by Blackstone. They're also going to be managing $50 billion. So they're transferring, essentially saying, here, you manage this money for us. Obviously, the premium money we bring in, and that'll go up to about almost $100 billion over 6 years. And again, they're paying $2.2 billion for that 9.9% equity stake, and they also are acquiring their affordable housing assets, and they're doing that in their core plus non-traded REIT, I believe it is. That's individual investors in there, but it just shows you the breadth of Blackstone. And by the way, we don't talk about it that often. The company has a $118 billion market value. To put that in perspective, it's only $20 billion shy of Citigroup. So it is an enormous financial services company.
Are they the largest homeowner in the country?
Yeah, I think they were with Invitation Homes, yes, but that, remember, became its own company.
It's a great business, owning homes.
But in this case, obviously we all know insurance companies and the need to try to create some sort of return. Well, it's very hard to do in the corporate bond market or in any bond market. Yeah. And you do have more of that ability here, perhaps, with Blackstone working those assets. You just can't buy enough liquid bonds. It opens up some yield opportunities, is the thought there. It frees up capital, obviously, for the insurers themselves. And it is sort of an evolution that continues for Blackstone.
I got a question for you.
And it moves them closer to credit. Remember, the liability here is 40 years, so you don't need liquidity if you're an insurer as much as you just want to make sure you generate some sort of return. Sorry, what's the question?
Who is the most humble billionaire in America?
There's a lot of humble billionaires.
How about someone who works at
John Gray?
Yes.
Yeah, he is.
It's just a humble billionaire.
You have to meet somebody who doesn't like the guy.
I don't know if he's really a billionaire.
It's kind of annoying. Oh, yeah, he is. Oh,
you think he's annoying?
No. It's annoying that nobody ever says that they don't like the guy. Everybody likes that guy.
Well, everybody likes him because he does a tremendous amount of charity work.
He does a great
And when he does it, he actually does it. It's not like he has a staff.
Obviously, as president, CEO, Steve Schwarzman still.
You introduced me to him.
I know. Anyway, it was an interesting deal. And it does show sort of the changing nature of these firms. They don't own an insurer, though, remember. So they're not taking on insurance liabilities, unlike Apollo and KKR, which actually do have insurance subsidiaries. But they continue to expand. Remember last week when I mentioned to you the financing of that Stamps.com LBO?
Yes.
And it was all credit funds. There were no banks.
Right.
Again, this goes back to that idea of where are you going to be able to find some sort of additional yield. That's leveraged loans. But it's interesting. And that's kind of stuff now that they're going to be able to invest in on part of these $50 billion.
I'm worried about this whole closet finance because we had it in 2008.
You're worried that the risk is being taken on? Yeah.
But maybe the Fed is on top of it. Jay Powell seems to have...
well, the Fed is the one that says the banks at a certain level aren't allowed to do it, which is where the credit funds are able to disintermediate.
That's why Jamie Dimon, everyone keeps asking him, what would Jamie Dimon feels like Prometheus bound. Doesn't he feel like Prometheus?
Why? Because
the weight of the world?
What? Well, he's tied up. That bird keeps pecking at him, which is financial service, Square. Remember, Square, the best opportunity since Jim.
Yes.
And if he were unbound, he would do a much better job, like Upstart, which is unbound.
Shepard Smith here. Thanks for watching CNBC on YouTube.